Good evening, everybody. This is probably going to be more of an analytical session versus looking at different charts. This is kind of more looking at what do you do when things happen big, and so this is kind of more directed toward the place that you want to have your safety stops on. So anyways, as we saw today, when it opened positive, you could see the trend we were in, the sideways trend in the market for the last 2, 3, almost 4 weeks. Oh, you okay? That's today when the market opened up and started trading positive, that was a good indication that yesterday's selling was just kind of reactionary. That apparently, and I say apparently, you'd think with a quarter rate cut in the interest rates, that wouldn't have moved the market around very much. But obviously, apparently if people were expecting a half-point cut, they didn't like it, so they were selling off. Then today, when the market opened positive and traded well above the T-line and well back up into the range, that was kind of not expected, but kind of fit into the narrative that we were still moving sideways. Pablo, yes. In the chat room during the day, I'll usually come in and everything will be in text first thing in the morning. Because if you're in the members area, the night before you can go to the members area and see what the recommendations are. And then as you come in, people are throwing ideas around. And so I usually don't come in until late morning or even at noontime in the main room. I come in a little bit earlier in the options room. But the information that you're looking for should be available in the members area, stock picks area, so that you can kind of analyze why, and again, being in about a 2-minute video, it explains why those picks are being recommended. So I will put text comments in, but usually in the morning everybody's evaluating and putting on their trades. So, Jimmy might have to help out James. Okay, so with that trading positive, that would have fit into the narrative that we were still moving sideways. That if they had closed up here, we were still in the trading range. That was just a ink there for a while. But when they came out with the tweet on increasing the tariffs, you could see people just pulling the plug. So if you had long positions on and it was trading, the markets were trading up, as soon as it came back down through the open, whether it was in the market and or your positions, you pretty much should be able to visually expect, or not expect, but know that as soon as it goes back below the open, it's now going to create a dark candle. And in this case, nothing positive, that they're selling off. So this goes back to my comment. We often hear me say, always put on a safety stop. If you're looking at your positions in the morning and everything seems to be moving all right, and they start heading up, just pick out a point that says if it comes back down through this level, we should be out of this trade. Now, hopefully when you're analyzing the candlestick charts and you know the probabilities are working in your favor based upon the signal or the pattern, you probably don't have to worry about it most of the time. What you're trying to protect yourself is from something like this. It doesn't happen very often where they have a big reversal, but I have discovered through the years that every time I put on a safety stop with that worry of, oh man, what if they come down and pick me off and then take it back up again? If you're looking at the candlestick charts, if they're moving down to pick you off, more than likely, if you've got 1,000 shares trading at $25, they're not going to sell 240,000 shares to take it down to where they can pick off your 1,000 shares. If they're coming down and hit the level you think they shouldn't be trading, it's because somebody out there is selling. You want to stop out of that position. So same scenario. Look what happened in the NASDAQ. The NASDAQ not only was trading higher, but it was trading above where it opened yesterday. Without that tweet today, that would have put us right back I lost $10,000 the stop got picked. How far down would you have been if it didn't hit the stop, or if you didn't stop out? So anyways, the fact that when they traded it up and then they came back down through the open, I pretty much told you we don't want to be long now. That's a definite reversal. This is, what did they do that for? Oh, there it is. Same scenario. Took it up, well above the T-line, back into the trading range. But when they started selling it off, we could see it coming. You could see the shadow getting bigger and bigger. But you knew that if they took it down through the open, you should be out of that trade. If you bought, John, no, the logic should be, if you bought, now get to some, yes, if you bought, but then it came back down through the open, you were buying based upon that open, signaling the fact that the bulls were in control, yeah, you could be buying. But if during the day, the bears were able to knock it back down through the open of where the bulls were supposedly in control, you probably want to close it back out, because the probabilities are pretty much telling you the bulls aren't there, confirming the buy signal you were buying in the first place. The probabilities are going against you. Close out the position. And I say this on the basis that I've always worried, I've always got that concern. I'm trying to find something to illustrate that. Oh, this one was opposite. Well, let's say today, when it opened positive and started trading positive, the cash is getting close to the oversold area. We could see that it was probably doing a bullish harami right on the 50. So if I'm buying in here, I'm expecting that that's a signal formation or a signal setting up. So if I was buying with the anticipation of a close up here, I have a bullish harami, get ready for more. That when it came back down through the open, the probabilities have just gone against me. We don't have a bullish harami anymore. We don't have anything that tells us which way things are going, especially in a bullish position. Close it out. I have always discovered, I've not always discovered, I've discovered that 90% of the time, or greater, I am happy I got stopped out based upon buying something that looked good and having a stop that when I got stopped out at a level that I shouldn't be long, there is no buy signal. Not now, but when it opened here and started trading up here, what did you have? You had a big green candle, a bullish harami. The fact that when it came back down through this level, yeah, you don't have a buy signal anymore. It's been negated. Close out the position. So if I stayed in, I did. It must open positive and trade positive. Correct, John. Which one are you referring to? I can probably better illustrate. Ahmed, you would have, that would have been apparent. That if you didn't close it out yesterday, or close out positions yesterday, because you can see there's been a change of investor sentiment with a bearish engulfing signal, stochastic setting down. What did you need to see today? You need to see it open positive and trade positive. And it did. So without this tweet today, I would have guessed they could have closed up here in this range, a big green candle, bullish harami, back up above the T line, and where would you be? You would be right back into this trading range. Now, when the tweet did come out, as I illustrated earlier on the close today, that had that tweet come out with the market doing this, it probably wouldn't have affected it as much because investor sentiment was going in this direction. The fact that it came out when investor sentiment was already bearish just added a little bit of fuel to the fire. So IMMR, yes. Now we're getting off topic, but this is this should have been relatively apparent. Hey, I hate that thing. I'm going to kill it. There was your fry pan bottom breakout. However, look what happened on the fry pan bottom breakout. Yesterday you had a shooting star signal. Still closed up above the fry pan bottom breakout area. So what did we need to see today? Looks like it opened here and traded here. That's what we wanted to see. I would have definitely had put a stop right there. Because if it came back down through there, what was it telling you? They weren't getting up through this level. Now, even though it did today, you can see the type of signal it did. It did a bearish, harami, spinning top type signal. That's given us a signal. Now, is the conclusion the fact that the market turned around that it caused this? Yes, but remember, this is the accumulative knowledge of everybody buying and selling during a specific time frame, which tells you they were selling, and if the market was the reason, that's why they were selling. Ahmed, if the market opens positive tomorrow, here's what, this is what we're supposed to be talking about, is projecting targets. Where at this level, where would you think at least the next target might be? Probably right here. So even if it opens, if the market or the jobs report is strong, you'll have to see what the reaction is. And that goes back to the analysis of, there's a lot of times where you see an excellent earnings report and they sell it off. You're sitting there thinking, not you, but me, back in the old days thinking, wait a minute, this stock's been going up, now they've got great earnings, and bam, they've already turned around and I bought it at the high. Or this stock's been going down and they just reported terrible earnings yesterday and boom, it's skyrocketing. That's where the graphics, the candlesticks, immediately tell you what they're thinking, not what you're thinking, what they're thinking. That's true too, Bill. So that's why, as you've seen in the members' comments, that I said have both long and short positions. Why? Because which way was this market telling us it was heading? No idea. So if we don't know whether it's going up or going down, we can still do very simple. I mean, the simplicity of candlestick scanning just makes it so easy to find 15 good bullish charts, 15 good bearish charts. And so maybe I'm still optimistic. Maybe I have 6 or 7 long positions and 3 or 4 short positions. That mean I think it's going up or going down? No, that means I don't know which way it's going, but I can still make money both ways. What? Those 2 moving averages. That's the 50 and that's the 200. Hold on for 1 second. Yeah, up the stairs, down the elevator. The black line is the T line. That's the 8 exponential moving average. That's the one that we use very effectively with candlesticks. The T line is a very simple trading strategy. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. With the caveat that the further away you move from the T line, the higher the probability it's going to come back and test it. So the further you move away from the T line and you see a sell signal, probably that's more compelling that there's been a reversal. The green line is the 3T line, which becomes more effective the further you move away from the T line, number 1, or number 2, you can use it as a little confirming indicator that the T line is, that the T line has been breached. Yeah, I keep forgetting to put the 34 on here. So anyway, that's the reason we got the this on here. The T line. When we do a T line training, it's basically telling you that the T line acts like a Fibonacci type number, Fibonacci characteristics, a natural support and resistance level of human nature. So when you combine the combination of candlestick signals, which are the graphic depiction of investor sentiment, and the T line, which is a natural support and resistance level of investor sentiment, when you combine those two, you've got a very strong trend indication combination. Vic, I'll try to remember to put the 34. I probably have it over on the other chart. Okay, so this type of action, as I said before, anytime I put on a trade or look at my trades in the morning, I'm trying to pick out something. I'm just going to use this example on Amazon. Let's say we're in the oversold area. It opened positive and started trading positive. And I thought maybe this is a good time to start buying. I'll pick a spot that says it shouldn't come back through that line or through that level, the open. The black is the 8 exponential moving average, the T line. You can put on the 20 SMA if you want to, but I've discovered the 20 SMA becomes more effective the longer or the more steady an uptrend is. The further away they move from the 50 and don't come back and test it, they usually come back to the 20. So the good thing about candlestick charts is if you want to try something, Arthur, if I'm echoing, you want to check to make sure you're not logged in twice. I'm trying to see. Nope, I don't even see you logged in. So I forgot what I was saying. I forgot what I was saying. So, all right. So let's. Okay. The first thing we were supposed to be kind of looking at is projecting targets. We'll keep coming back to what the markets did today. If we see something like this, I got to figure out how to move those away from each other. You can kind of see the fry pan bottom. You see pretty much where the fry pan bottom started, right in this range. We kind of could see where the first target was, the 200-day moving average. So if this is pushing up to that target, that's telling you the fry pan bottom's working, and it's just about at the breakout level, that if you were long, or you can see, and make this bigger now, that we had kind of a little doji sandwich up here. So when it started trading positive, all we had to do was watch to see what it was doing at the first target, the 200. Now, do you always get a big move like this? Rhetorically asked. The answer is no, but the probabilities of being in a move like this are dramatically improved when you're just using the candlestick charts and seeing where the bullish and bearish signals are coming in. So that's why when I am looking to either enter a trade, or I'm entering a trade here, notice what this did. When it bounced off the 50, where do you think the next target was going to be? Probably the 200. CJ, that's all based upon the activity that you're trading. If you're a day trader, obviously, if I'm day trading, I'm going to use the daily chart to tell me which direction is whatever entity I'm trading is likely to move, and then I know I probably want to be day trading in that direction for the day. I'm a swing trader, so my positions usually last anywhere from 2 to 10 trading days. But that means I'm more than likely using the daily charts. Ronald, you can put whatever you want to. I don't use Bollinger Bands because I use, as you can see, my charts are relatively simple. My first criteria on any trade is the signal or the pattern. Notice right here, when we did a doji gap up, your best friend bobble breakout, that produced an extremely high probability we were heading higher. Pablo, I love to day trade, except I don't have the time to do it. And unfortunately, I'm not very good at it because I'm just not good at it. So I pick out the time frame that I'm good at, which is, to me, is put on the trade and see what it does over the next 2 to 10 trading days. Oh, let's see. I don't know why I did that. Yeah, OLED we'll get to. Yeah, hang on to your individual stock requests until I tell Jim to do the double line. Because what I want to do right now is just kind of illustrate how the visuals of candlesticks make our trading that much easier. If I see selling or a sell signal close below the T line, where do you think my next target is likely to be? Back here to the 50. If I'm watching it go to a target, what benefits do I have? I can see what type of signals occur right at that level. If I've got a chart that I want to get into, but I can't really tell which way it's going, it's this one, XON's trying to break out, close below the T line. What do I think could possibly be happening here? Probably still drifting, waiting for the 50 to catch up. So right now my target would be, I'm going to wait to see what happens once the moving averages come together. Uh, okay, and so UVXY. When this started back up, I don't know how all these lines get on here. When this started back up, where do you think our first target was? The 50. Now, is that worthwhile? Well, if I'm buying stock, yeah, that's still a good 15% move just to get to the first target. So I can estimate where everybody else is watching to see if it's a worthwhile trade or not. When this started pulling back, where do you think the first target was likely to be? Right there. Close, hit a low smack dab on the 50, and then did a bullish signal. What's that tell me about the target? It hit the target. You can do that, Ron. Yeah, we're going to be doing a full day training on option strategies with candlestick charts. Not so that we're saying, oh, here's your best trade strategy that you should be using. We're going to go through all of them. The spreads, the bullish spreads, the bearish spreads, debit spreads, credit spreads. Not so that we're telling you which ones are the best to use, so that you can figure out which is the best for you to use because of your trading nature. Some people like to write positions against a trend. Not very big profits, but very high probability profits. So we're going to be doing that here, not in the next 2 weeks because we'll be at Cayuga Lake, but probably late last couple of weeks in August, we will be doing a full day training on the different strategies that are most effective with the different price moves. In a down market, if XYZ stock goes up after strong earnings, would you be likely to buy? Yeah, we'll get to some. Well, here's the case today, where the earnings are probably pretty good. Now, what's our next likely scenario? Probably at least a 45 degree. What's our common price movement? If you've got a trend and it consolidates, when it comes out of that consolidation, it usually goes right back up into the trend fairly quickly. So that could be one trading strategy that you can easily use the signals and know what type of pattern setup that you can recognize yourself. And that comes back to, because we've got 12 major signals, which you want to learn because that's the bread and butter of candlesticks, the patterns, and then the top ranked signals and patterns, about 18 of those. I've kind of moved back from learning all the signals and patterns. You want to be familiar with them, but I'm kind of pushing people to learn 4 or 5 and become an expert at those. That way you're not boggling up your mind with all sorts of trying to learn all the patterns and not knowing what they actually do. If you learn 4 or 5 and concentrate on when to get in, when to get out, and when to stay long, now you're in control of your investing versus having to be concerned about everything else that's out there. Where is your trend line on that chart? On this one, I just kind of, visual. You kind of just see that it's going in this direction. On something like this, look where the breakout occurred. Right about where the fry pan bottom started. Where do you think the next likely target's going to be? Probably up here, right where this started. Now, is it going to go there? Who knows? But the expectation would be that's probably what everybody else is watching. So what advantage do we have? We can see whether the trend's going to continue or whether we get a sell signal before we get there and then come back out of the trade. KL, when it sold off look where it, I better make this bigger. When it sold off hard yesterday, where do you think the target was? Didn't quite get to the 50, opened on the 50 and came back up. Why is this relevant? Because we can see what type of signal it created right at a level that everybody's watching as a potential support target. In this case, we can see we had a big bullish, I don't know, piercing signal. So this opens this, if this opens positive tomorrow, what's it telling us? It's telling us it's confirming the signal that bounced off the 50, and we're probably coming back up into this trend trajectory. CNMD, TZ, then use that as your buying strategy. Learn where the buys are. You can see the uptrend. You can see the pullback. And then you can see the bullish doji sandwich back up above the T-line. Where's your first target? Right there. If it goes through there, where's your next target? Probably back up into the trend channel. Again, the visual analysis is so much more easy to recognize or utilize, knowing what signals are occurring at specific places where everybody else should be watching. There's kind of a I'm partially colorblind, that's why I have to make these charts big. Look at the kicker type signal with a booster. Where do you think your first target is? Where everybody else is watching. That's right, a rocket booster. And CLDR, fry pan bottom. Ah, humbug. This fry pan bottom was setting up. Notice what it couldn't do over here. They couldn't take it back below the T-line. Where do you think the ultimate target was? The 50. What happened right here? A fry pan bottom breakout. Now remember, we're trying to buy the signals when the stochastics are in the oversold area. Usually a pattern breakout will occur when the stochastics are in the overbought area. But if I can see where my target is, at least I know I should be holding on until I see what happens. If something is pulling back, you can usually pick out where the target should be and then see what type of signal occurs at that level. 50 acted as support here. This was a bad hair day in the market. And look what happened to the CBOE exchange trader. Big bullish engulfing right smack dab off the 50. AMAG. Look what happened here today. John, always the first criteria on anything that you want to be looking at is the signal itself. Now everything else becomes a confirming indicator. First of all, where are your stochastics? Secondly, where are you compared to the T-line? So does anybody see what type of signal this is potentially setting up? Yeah, kicker, John, you're getting close. There you go, bullish flutter kicker. So, stochastics in the oversold area, they gapped it up above the previous day's open that went this direction and did a doji. So now what do we have as far as our prospects for a positive trade? Well, we know the doji rule, that if it opens positive, more than likely it's going to trade positive giving us a bullish flutter kicker. Where do you think your first target is? Right here. Now, you've got a bullish flutter kicker that might be stronger. It was not really stronger. It's one of your strongest reversal signals at the same level it bottomed out before. When it gets to the 50, what can we kind of anticipate? That the strength of the signal might take us up through that level. Let's see what else we got here. Holyfield. When this steady uptrend, steady uptrend, steady uptrend, where was our target? I hate this thing. I'm going to kill it. When we broke through here, the T-line, we're in an uptrend. What's our first target? The 50. This is why knowing the nature of each candlestick signal tremendously adds to your evaluation of what's happening. Look what happened at the 50 was selling. Aggressive selling? No, doji, doji, doji. Then a positive open after the 3 dojis. What's that tell you? The pullback was very indecisive, and now the 50 is not a resistance level. Where's your next target? Right up here. Again, this is not because there's any magical attraction. Just that's where everybody's watching. Fry pan bottom breakout. Where's the next target? Up here. Now, is it going to go there immediately? No, it might be a J-hook pattern, but at least we know what to be strategizing on the way up. That we look for the sell signal, take profits, and if it comes back up as a J-hook, we know where the target is likely to be, up there at the 200-day moving average. We also know our wave counts. Again, a doji gap up. If it opens positive, what's it telling us? Probably trading positive. So what do we have? Wave 1, wave 2, wave 3. Wave 1 is 5 points. That tells us we're probably heading for the $24 area. So based upon the candlestick patterns and when we break out, which is right there, that tells us we've got a new dynamic. Oops, now I can't get rid of this stuff. This just makes you want to kick your grandmother. All right. CVM, when it pulled back, excuse me, where do you think the target was going to be? When it got to the 50, we watched to see what type of signal. There's your bullish harami, right smack dab on the 50. What did that tell you? That pretty much your selling had stopped. So, again, the information built into each candlestick signal gives you immediate analysis of what the investor sentiment is doing at specific levels. So when this came back up through the T-line, the stochastics in the oversold area, where was your first likely target? Right there. Now what do? Well, we know to look to see if it's confirming, goes through, we have more upside. If it opens lower and trades back down, pretty much tells us that target was the resistance level. When you bounce off a moving average, where's your next target, the next major moving average? Okay. So, now we're going to go back to the ones we've been looking at. Look at the slow curve, morning star signal. A morning star signal followed by a doji sandwich is what? And look at the strength of that doji sandwich. A doji gap up. What did that tell you about the investor strength as it was coming back up? It was very, oh, Jim, you better have a note from somebody. What was that pretty much telling us? That this was going to be a strong move. Now, unfortunately, when it opened, Okay, get one. It gapped up, and it was up like 35% during the day. So what's your decision-making process? You got to decide whether that's a really good risk reward at that point. No, not a McBurrito. There's your morning sandwich. That's your McMuffin. Brad, you did take profits up there. Good for you. Now, I'm going to get way off track here. If you've got a stock that's up 35%, look to your 10-minute chart. You got something like this going on, still trading up, trading up, trading up. Oops, I may hang on to it, but as soon as it starts trading back below the T-line, this one I might have said, okay, let's hold on and see what it does. It came back up. Well, then it came back down through the T-line a second time. What'd that tell me? Let's take profits. We can always buy it back, but we've had it start trading below the T-line. Brad, good for you. So coming out here, obviously, is much more profitable. And coming out up in this range just gives you a lot more insight as to when the selling has started. Now, why would we suspect some selling starting? No matter what's happening, the strength of a signal, you've still got to calculate whether people are going to start taking profits because you're that far away from the T-line. Is it a good buyback? Not yet that we know of. Now, if they open up positive and start trading in positive, what does that tell you about today's profit taking? The profit taking is over. You're still heading up. And again, look at where you started getting into, right into this trend channel. Now, the reason we recommended the buy was because we expected it to come back up into that trend channel. We just didn't expect it to happen all in one day. Yes, that was an earnings gap up. So, if you'd seen this, especially this in the positive open, that's where you should have been buying. I was expecting it to hopefully open up here and eventually climb back up to this range. But what it does do is goes right back to the basic concept of candlestick signals, is it puts you in positions where the probabilities of being in a good trade is greatly in your favor. Well, if the 3T goes below the T-line, it's probably already been indicated by the price going below the T-line. So the 3T going below the T-line is just a little bit added confirmation. Jeremiah, yes, when you ask that question, the stock's up 30, 40% or 35%. Is that where you want to be buying a stock? The answer is probably not. Where do you want to be buying the stock? That's where you say, all right, I missed this one, but what was this setup that told me I could be buying so I could possibly be in that type of setup? So often get a lot of questions like, is it too late to buy this one? The answer is yes. You should have been looking down here for the buy signal. That now you should be in a hold situation. And that's what happens to most investors. Remember what the Japanese rice traders tell us about human nature. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. What you want to get your analysis oriented toward is figuring out when they're buying and figuring out when they're selling. Okay, now Natty today was a situation where with the market trading positive and it kind of trading positive, it wasn't making for a very good short position. So that one didn't execute. Now on the other hand, I forget which one it was. TX. TX, we could see the rounding top, and then it did trade down most of the day. Came up a little bit, but also notice what it did. Look where it resisted, at the 3T line. Now here's the reason that's important to us, especially when it resists at the T line and the 3T line, is because nobody, statistically, has the T line or the 3T line on their chart. So when it comes up here and resists at this level, it wasn't because everybody's saying, oh, look what it's doing at the 3T line, I'm going to see what it does there. That's a natural, again, a kind of a Fibonacci characteristic resistance level that you want to be aware of, because it's at a natural resistance level because nobody else has it on their charts. When your J-hook setup fails, is that a good time to short? No. Just because you have a sell signal or something that's not going positive doesn't mean it's a good short. It just means it's probably not a good time to be buying right now. Crocs, when it traded just below the T-line, this would have been one where we're waiting to see if it opens positive to see if it's going to do a bobble breakout. So that's why you want to know what your patterns look like. The gold stocks came back strong. Now, more than likely, you should have been out on this day. But now you can reassess to see whether it's time to get back in. Pause, another one. That if you closed out, big bullish engulfing. With the big bullish engulfing, what's the underlying analysis? We're back up above the T-line, probably still in this trend. So using the T-line just puts you in a situation where the probabilities are much greater in your favor that as long as you stay above the T-line, you're in the right direction. Especially after a buy signal. Notice a little cradle type pattern here. Cradle pattern is 3 indecisive trading days. If it's 2 or 1, it's a morning star signal, but they all illustrate the same thing. After a little period of indecision, they've told you which way their decision is at that point. Crisp. Nice steady eddy. This is where, notice how choppy it is in here. But what was the most obvious underlying factor? They couldn't close it below the T-line. Ed, yeah, you can do that if you want. Again, as long as you know what indicators work. Again, my first priority is to see what is the signal, and then everything else becomes a confirming indicator. AZUL, staying above the T-line. And what makes this a pretty relevant chart? Here's your best friend gap up scoop type pattern. Now what's your strategy? You just stay long as it stays above the T-line. Why was MAKR such a good trade setup? Because you can see the fry pan bottom, J-hook pattern, and then boom, the next wave to the upside. KPTI. So here's a good example. Look at your morning star signal right here at the 200 and the T-line. What's your criteria? You stay long as it doesn't close below the T-line. So you just have your safety stop down here somewhere. If it comes back through that direction, that means they've pulled the plug. You want to be out of that position. We recommended Sally Beauty today because of the column reversal. Look at the big column. Look at the big column. Now it traded positive most of the day until near the close. Oh man, my phones. So what's our strategy at this point? What did we want to see this do on the column reversal? Continue its uptrend. If this opens lower tomorrow, what do you want to do? You probably want to close it out, because what's that telling you about what happened at the 50? It's still acting as a resistance level. So you've probably seen in my comments that you always want to have some short positions on just in case. We recommended going short on TX today, which seemed to work, except it did a little doji, so it was up 1 penny on the day. However, what type of signal can we expect? If this opens lower tomorrow, what type of signal? A very doji sandwich. If it opens lower and trades anywhere near the magnitude of this candle, what's it telling us about our support level? Not acting as support anymore. We're probably in wave 3 to the downside. Same scenario on grub. You can see the dumpling top, but then you saw the doji gap down. You just stay short. We've bought puts on this one, and they're working out very, very well right now. And OLED, we've got calls in this one, not as big a position as we'd like, but you can see the steady eddy. Now, who was it that was just saying they like to buy in the pullback? Was that TZ? Notice the bullish harami on the pullback, telling you that the selling is stopped. Notice the left-right combo on the pullback, telling you the selling or the buying had started again. And where did it start? Right back on the T-line. Now, today would have been an indecisive day, but there's one kind of simple caveat, that if you've got this extensive an uptrend and it just barely closes below the T-line, usually give it one more day to see if they're going to open up positive and continue the uptrend. If it had opened lower and traded down, you close it out. But I think after hours it was trading up here somewhere because of earnings. All right, so the big traders, Nugget. Nugget. The bigger the signal, the more compelling there's been a change of investor sentiment. They sold it off, did a huge piercing signal today. Apple was trading up pretty good. It gapped up on earnings, but where is it now? Right back to the T-line. What did that tell you about this uptrend? This is probably the fizzle at the top. Amazon, there's your bearish harami, and where did this occur? Right smack dab here on the T-line. They gapped it down. What did that tell you about your downtrend? That you were in a downtrend until you see a buy signal, and not necessarily a close above the T-line, because you're moving further and further away from the T-line. If you see a buy signal that far away from the T-line, you probably want to start taking profits, because at least they're likely to bounce it back up. Now, also notice what everybody else was watching today. Look where it fizzled out, right smack dab at the 50, and then started selling off. That's a pretty good piece of evidence telling you that they're not taking it back up yet. On average, how many positions do you have open at any one time? I make my trading policy for if I've got $200,000 trading account, it's going to be 10 positions. But that's a lot of the explanation of that is it helps you with your discipline, that if you don't change from 10 positions, that means you scrutinize the positions that you'd like to get or that don't look good based upon another one that looks good. What you're doing is just cultivating, coming out of an iffy position and moving back into a stronger position. But that will do some night on how to keep your emotions out of your trading. Do you make these trades with stocks or options? Mama, that's up to each individual. If you're an option trader, remember, you're not buying options because of an option price. You're buying calls and puts or spreads based upon Oh, it's up 16 bucks based upon the underlying stock. So if you're a stock trader, you buy the stock. If you like trading options, you trade the options. Hold on to your individual ones. Let's see. Okay, now, where am I? Let's take a look at the biggies. NVIDIA. Whoops. That went off into Never Never Land somewhere. NVIDIA. There's your hanging man. What do you do after a hanging man? If it opens lower, you close out the position. There's your close below the T line. Right now, you're definitely not long. You could probably be short because where's your next target? Probably back to the 50-day moving average. Tesla had been holding up pretty well, but notice where it did an evening star signal. Right smack dab at the T line. So if you were buying here, what do you think your first target was? The T line. And then what do you always hear me tell you to do? Watch to see what it does at the T line. Well, now you've got an evening star signal, a sell signal right here at the T line. You shouldn't be in this anymore. Where's your next target? Probably coming right back down to the 50. Western Digital was one of those where if you closed it out yesterday, that was the right thing to do because if there was going to be something good in Western Digital's earnings, the people in the know would have probably been buying going into the close. But you also had the effect of the market pushing it down, but you still had the probabilities going against you based upon closing below the T line. Now, it opened positive. I'm sitting here today in the options room. I said, all right, if it closes positive today, we're going to come up with another option strategy. But the fact that it closed back down here now tells us we should be looking at something else. Oh, I don't know if OLED would have as big a impact as some of the other ones. Okay, so that was now here's a different scenario. Micron was acting well, but yesterday it closed. It closed or opened here. Now remember what happened in the market yesterday. They were trading up here for a while, and it stayed up here most of the day. And then late in the day, they started selling it off. Well, what can you see happened to Micron? The market was up early in the day. Micron actually gapped down from the open. So that told you immediately that there wasn't any strength there. With them gapping down and stochastics starting to roll over, we closed out the position immediately because it wasn't going in the right direction. It should have been opening positive. Instead of gapping down on the open. And we made good money on this one on the way up. But the fact that they opened it down here after earnings and came back up, that was good. But it was lower, obviously, because it closed here at the open of the previous day. So if this was going to continue to act well, obviously what did we want to see? Moving in this direction. Where was our safety stop? Right here, because logic says if it was trading up and then came back down through this level, who was in control? Well, now then after that, when it closed down here, we bought some puts and anticipating After this day, you'd have a bearish doji sandwich. Well, it did a double doji sandwich. So when it opened here, where do you think the target was? Well, if this candle and this candle were going to be the same, you're probably heading right down here to the 50. Okay, and Netflix is just a very easy chart to analyze. When you had shooting star, doji, shooting star, close below the T-line, what's that telling you? You should be out. If you started going short, where do you think the first target was? Here. If you were short, the earnings coming out put you in this situation. Where was your first buy? Well, if you're in the oversold area, they shouldn't be able to trade back up through the open. That's where you covered your short. Where do you think the target was? Right back up here to the first major resistance level, the 200-day moving average. What happened there? A bearish harami. Open lower the next day. It's gone. Could be wave 1, wave 2, wave 3 to the downside. So, again, this is not rocket science. This is just kind of common sense, being able to analyze what the charts are telling you based upon what the Japanese rice traders have told us is normal human nature as far as producing patterns. Look at your bearish flutter kicker on this one. That should have given you a little bit of suspect. However, today there was a relief that right on this level they opened it and started trading positive. Where was your stop? Right here at this level. Because when it came back down through there, what does it tell you about the T-line? It wasn't holding. Now, because of the market condition, it doesn't matter. It doesn't matter why a chart is forming. You could possibly go short on this one, yes, with the expectation at least coming back down here, so that would put you at least in a profitable situation. All right, so the things that really work well is staying with the patterns, because the patterns are not going to react adversely when the market acts adversely. So here's your fry pan bottom on Twitter. Where did the breakout occur? Right here on a trend kicker gap up. Remember what a trend kicker is. You've already started the trend. Notice the bullish harami right smack dab on the 50. Then you had a trend kicker right into the breakout area. What's a trend kicker tell you? There's still a lot more upside. So the underlying factor was that held up reasonably well in these market conditions. Anytime I see a fry pan bottom setting up, look what this one did today. GOL, market was terrible, and it was still trading positive. Yeah, Twitter. Okay. MGI. Not a very high price stock, but look at your slow curve bobble breakout. Wouldn't be afraid to be buying this one on positive trading. Fry pan bottom, let's make this a little bit more stretchy. Where did it kind of break out? Right in here. What type of day did it have coming out of a fry pan bottom? Oops. I don't. Had a good day even with the market selling off. And CLDR, fry pan bottom, you're right here at the breakout level. This is probably going to be recommended in the members area tonight, because if it breaks out through this, what do you got? You got a fry pan bottom breakout through the 50, telling you the 50 is not acting as resistance, and now you're up here in this, whoops, let's make this a teeny bit smaller. You're up here in the gap area. And why is a gap area good for a price move? Because there's no stock here resisting. What usually happens when people are buying and it's going this way? What's the normal thought process? boy, if it ever gets back up to where I bought it, I'm going to sell. Well, there's nobody there to sell, so that usually makes for what we expect coming out of a fry pan bottom in this case, a very strong price move. I would rather wait to see the signal. If it's a bullish harami, I would rather wait to see the signal confirm. So I didn't do anything because I had to go pick up the darn cars. Which one? Oh, I may have been aggressive if I'd been here, seeing that XLNX was traded as a bullish harami right off the 50. If I'd been here, maybe I would have started, well, I probably wouldn't have done anything until the end of the day, which obviously the end of the day was not time to be buying. So the thing that we want to scan for is the strong signals. Best friend, bobble breakout. This gives you high probability trade setups. Or something like what we saw in ACAD. Look at your trend kicker that gapped up through the 50 and basically up through this area. What's that imply? Probably more upside. Oh, John, I'm down to 12. You could consider it a scoop pattern. Not as clean a scoop pattern, but it's got that same implication. And Casa, now that's a little bit better scoop pattern. Notice where the doji, long-legged doji, bullish confirmation, got to have a little scoop. That should cause a slingshot effect. So when they came up through the 50, they came back and tested the 50 and held. Where do you think the next target's going to be? So buying here and selling here, yeah, that's a good 60% upside potential. Stay. Close this out the other day when it closed below the T-line. Now it's got a kicker signal. If it opens positive, we're probably still heading in this direction because of the kicker signal, number one. Number two, the fact that they opened right at the 200 and traded positive from there. ZYXI, you can see the little breakout. There's a gap area up here. And then ZIXI also had a nice little kind of rounding bottom. Closed right at the 50, but I think after hours it was trading up here someplace. So the benefit we have with candlestick analysis is we can see what's happening at levels that might be relevant to what everybody else is watching and seeing what type of signals and patterns are being created at those levels. Okay, I think that's about all I've got for tonight. Oh, no. Becky, what's our special? Because of the targets, let me see. Becky, are you there? Do you have the, we've got what we call convergence analysis. And convergence analysis is when you can look at a chart and you can see 3 or 4 or 5 different things coming together. Let me see if I can. This is always tricky for me. Try to take a look at this bundle. I think you'll like the benefits of that. So, yeah, what you want to do is the more you can put into your analysis. And, for example, can think of this one right offhand, that if we see a best friend, bullish confirmation, that's your best friend, and the fact that it did a bobble breakout, that's adding a lot of, no, that's what we owe Tim. Tim's our technical guy. That adds a lot of probabilities of being in the right place at the right time. We did that over here on MDR. It's since backed off, obviously, but there was a left-right combo breakout right here at the T-line. We made some good profits on that quick trade. So the more pieces of evidence you can put into your analysis, and all that evidence is seeing the different things that kind of confirm basically the signal or the confirmation of a pattern and a breakout of a resistance level. When you start adding that all together, it just dramatically not only improves your probabilities of being in the right trade at the right time, but a strong trade at the right time, because everybody else may be watching the same indicators, but some are watching a breakout of the 200, some are watching for the gap up. And when they all occur at the same place, we know we can start moving immediately without having to wait for further confirmation. Okay, any general questions on candlesticks? Please take a look at the bundle, because I think when you start seeing everything in what we call convergence analysis, where you start seeing all the evidence coming together, it makes it much easier to move quickly to be in the right place at the right time. Gail, you can't really tell. I mean, you tell not by anticipating what might be happening. You see what the candlestick chart is telling you. How good is a homing pigeon? Homing pigeon is basically a harami, but the dark candle is followed by another dark candle. So what you really need to see after that is positive trading the next day to confirm it. Joe, what I usually do is if I see something, if this was going into earnings and they were still buying, I'm more apt to stay with it. Now, on something like Western Digital, when it closed here yesterday, right before going into earnings, I'm closing out the position because that tells me people aren't buying. The people in the know, or the people that are closely following that stock, are not buying. That puts me in a situation, especially with it closing below the T line, that I don't have any probabilities of what the investor sentiment is telling me. Now, on the other hand, if going into earnings it look like this, yes, I'm going to stay with it because that's telling me they're buying strong going into the earnings report. What are my stochastics are 12.33. MGI earnings in the morning. All right, thank you, Michael. Michael, are you heading for the lake? All right, you're driving, right? Okay. From Chicago? All right. Okay. Keuka Lake, yeah. Keuka Lake's one of the Finger Lakes. Very nice atmosphere up there. Okay, I guess with that, Jim, let's go ahead and do the double line. And in 4.2 seconds, do the other double line. All right, these are going to be relatively quick, or we'll have you here all night long. DRI, I'd be ready to short this one on weakness tomorrow. Your stochastic's still heading down. Oops, Jim, do the other double line. They're still scrolling Yep, I can't stop the scrolling. HXL. Notice the failure. You're below the T line. If this opens lower, where's your next target? The 80. The 80. The 50. Look at this price. Zyop needs to open positive and trade positive. If it comes down through the day's low, it's also coming back for the T-line area. CDMO, your 45 degree is still in effect. All you can do is stay long as it stays above the T-line. Lou, we did Amazon. Amazon, right now, if you're short, you can stay short because it failed at the 50 today. There's a shooting star on our GEN. If this opens lower tomorrow, you take profits. Azu is still acting well. You stay long as this stays above the T-line. SSO, probably heading to at least the 50-day moving average. McKenzie, that's a kicker signal gap up. You can still be buying this one. Anticipating more upside. Let's make this a little bit smaller. I hate that thing. I would anticipate they're coming back up to the top of the channel here. ZBH, stay long. If I was long, no, we have a 45 degree, I'd have a safety stop just below today's low. It shouldn't come back down through that level. AMED. Big bearish left-right combo. Very simple on this one. It gapped up today. That should have been your immediate alert. If you see a gap up in the overbought condition, what do the Japanese race traders tell us is happening? People are buying exuberantly at the top. If you know that, and you start seeing it sell off, you can start taking off half your position. You put your safety stop at the close of the previous day because logic says if it comes back down through the doji of yesterday or the previous day, you've got a bearish left-right combo. You don't want to be in that position anymore. As far as a short, I didn't read far enough. Yes, you could be ready to go short on this one. SUPV, you should have been out of this one today. You can see the obvious failure with a left-right combo right there at the 200. Did we do Zyop? Zyop, use today's low as your stop. Overstock. Another one that has to open positive to stay long. Now you saw the gap up doji, you saw a doji. When it started trading lower today, you should have come out because you knew it was probably coming back at least to the T-line. The fact that they gapped up in the overbought condition and did a doji tells you start watching immediately for profit taking. Milam, same scenario. You can stay long on this as long as it stays above the T-line. Apple was setting off before earnings, and then also Apple was selling off before earnings. Yep. Well, no, Apple's right here before earnings. That told us we didn't know which way it was going. So at that point, if you're going into earnings and you don't know which way it's going, you don't have any advantage going in your favor, close out the position. Now, had Apple closed up strong that day, yeah, I would have said hang on to it. Okay, John. Qs, you can be buying this one, the short Qs. You can buy that on positive trading. Notice the kind of the booster. Med, stay short if you're short. What it looks like, you can see the failure at the 50. Wave 1 may have covered it here, but get ready, especially Go short if it comes back down through that level. Microsoft, I know they were trading this. Microsoft, I wouldn't, nothing. Wouldn't be long or short. And the Russell, I'm sure, sold off today. Yep, it was trying to maintain. Right now, it's just sideways. Home Depot. Notice the evening star type signal with a doji gap down and the failure. I'd be ready to short this one, also with the expectation of coming back to test the 50-day moving average. AAOI. Left-right combo right here. Let's make this big enough. Kind of at a support level. It did a doji today, but your stochastics are still heading up. I would still use the T-line as your stop, but doesn't look terrible at this point. I would stay with it. If the trade immediately goes against you, how and when do you know to get out? Knee. I immediately reverse up the knee. Well, I take it you were in the puts. I immediately reverse it. It immediately reversed as soon as shorted at 6067. Jose, with hindsight, it bounced. Yes. So if you can see where everybody else is watching, if I was going to short this one, it would have been down here because what's everybody watching as support? Now I'd be more. So then, if you did get in and you say, oh man, use the halfway point of this candle. If it comes up through there, it's telling you there's too much strength to be short in that one. But there's kind of your learning process, James. This was a good short, provided the final criteria or a major criteria of a support level is breached. Chipotle. I ate dinner at Chipotle tonight, so it should be going up. It's pulled back, but notice the nature of the pullback. Indecisive, some selling, indecisive. Still the same scenario. It has to stay above the T-line. ENPH. Just stay long. You're in the overbought area, so you keep your safety stop at the previous day's open. AMD. Stay short. Ever since your bearish kicker signal, remember that kicker signal shows there's a lot of force to the downside. And Oki. That's a toughie. You really don't have a reversal signal, but you do have kind of a bounce off the 50. Unfortunately, or I say unfortunately, whenever I see a reversal and there's no reversal signal, I watch to see more diligently at levels that it might not go through because the lack of that reversal signal is telling you maybe the reversal isn't as strong as one that would have a reversal signal. Do you provide stocks to look for entry? Yes. Vin, I usually put out 2 or 3 stock picks, sometimes 4. Last night we put out 2 longs and 2 shorts because still didn't know which way the market was going to go. And we do it in a video format. So it's not just saying, all right, here you buy this. We say you want to buy this at this level because it would be forming a scoop pattern breakout. blink. Here's another reason why you kind of watch to see what everybody else is watching. Notice where the trend was or the resistance level. Now you've got a bearish left-right combo. If this opened weaker, I would probably close it out tomorrow. Silver, we can just go right to the commodity. Here's silver. It's pulled back. This is the September contract. So it's not going to look too much different than the, oops, that came right back up for some reason. Wonder if there's a quicker contract that I'm not looking at. No, even the August contract was still selling off. She, is that a symbol? Diebold. Diebold closed below the top. I would have closed this out today. Where's your likely target? Now back to the T-line. LCI gave up its potential. Look at the J-hook pattern that was setting up. And then with it closing back below the T-line, I would have closed it out because you've got an evening star signal, which means there's selling taking over. It can always come back, but right now the chart or the pattern that we were expecting, which was a J-hook pattern, has now disappeared. Go on to something else. Silica, also one that opened lower. This one I wouldn't be long or short. That's just an ugly chart. Can you put up the bundle futures on the Eurex? Phenomenal chart lately. Oh, the bond. I'm sorry. I can't off of here because I don't know what the symbol is. Richard, remind me to look it up tomorrow. No, not tomorrow. I'm driving to the lake tomorrow. Remind me Monday. Baba, yeah. Look at your failure up here, then your gap down. I'd look to be ready to short this on weakness tomorrow. Thank you, Pablo. It's usually very pleasant at the lake. Sit out a lot of evenings, and the moon comes across the water just like a big spotlight. Look for a 45 degree off of lattice. Now, put your safety stop right here. It shouldn't come back to that level. Knee. Yeah, it is a bullish engulfing, but look at the trend. It's not anything exciting. I'd probably be more apt to be looking at knee if it can get through the congestion area. Just not a real enticing chart. Just kind of a slow drift. And dust turned right around from yesterday. So what's that tell you about the uptrend? It's not there. If you bought today, you should have closed it out because now you don't have a chart to look at. Oh, Jim, yeah, it was. I had the salad with the beans. I was going to have one scoop of beans. So I think it was a low carb. Nothing on this one. I don't know what the volume is. But if you were short, you just stay short. But you're a little bit more diligent because your stochastics are in the oversold area. When you will be back from the lake, visit. When will you? I'm even though we're up at the lake, we're online every day, so you won't get rid of me. But instead of me just watching you, There's going to be 6 of us watching you. So you've got to behave yourself. Gold could be a big piercing. Yes, you can get ready to buy this one. Positive trading. No, it's not really a reversal signal. This isn't a reversal signal. That's just a big up day and a downtrend. So, yeah, there's no signal in here. Now, had this been a doji, that would have been more of a signal. Then it's $97 a month. With that, you get the Monday night session also. The chat room is open all day long. You get 2 or 3 stock picks. And what was the end? There was something else. Oh, usually about once a week, maybe on a Tuesday night or Wednesday night, all the trainings that we have on videos, we might do a live training like entry and exit strategies, your stop losses, how to scan for the best signals. So those are all on video, but when we do it live, that way at least as a member you can sit there and ask questions and not have to wait for answers. We answer them right then. So, and we hope to be doing our marketing FGLB. I don't know what that one is, Richard. It's apparently not coming. Well, it might be coming up. Facebook. Ever since your dark cloud. Now, is that relevant? Well, look at all the things that it's telling you. At the place that they topped out before, you had another sell signal. Where's your likely target? Trying the 50. Oh, I imagine, yeah, but we're there. Looks like a good group of people coming in. So my chart or my screens, I've got the chat rooms on the left screen. I've got our training on the center screen, and got the other charts that we're watching over on the right screen. So you can't get away from me. We'll all be watching you on the left screen. Oh, is that, let me see. F G B L A U 9. See what that does. Nope. I'll have to look it up. Alpha gapping up above the 200, meaning up here. Oh, no bad jokes at all. They're all good jokes. I'll have to. Okay, Joe. The best friend? No. Remember, it's got to be a doji. This is not a doji. That's an update. TRI, nothing great there. Yeah, nothing there. Okay. We'll be driving tomorrow, so you won't be seeing me. But I will be online back first thing Monday morning. So, what is today? today's Thursday. Everybody have a good Friday and then a good weekend. All right. We'll see you then.